Hello, this is John Piper with the weekend video clip, and it's Saturday the 8th of February, and we're looking here at a chart of the hourly S&P. I would mention I'm sticking with the revised new format. People seem to like this, and I've also increased the size, which was something that we can do with this format, so we'll see how that goes. I'm starting with the S&P today because I sent out a chart of the S&P with yesterday's report. There are two very clear wave patterns to this particular chart. There's a 5 waves down there, and there are the 5 waves down here. And you'll recall I said in Wednesday's video clip that we may see more downside, but maybe not much, which is precisely what we did see. Now the question is, can we count this as a wave 1, or is it some kind of A wave? This does slightly confuse the issue because it's not a clear 5 wave count, but that would then be a 2 there and a 4 there. So the 5 is valid. The problem is now got a very sharp rally up here. Much sharper than you'd expect from a correction perhaps, and already it's testing the wave 4 resistance. In fact, it's pretty much bang on the wave 4 resistance here. We really need to see a pullback to keep the bear case alive in this case. Let's have a quick look at the form of this rally. This is a 10-minute chart. 1, 2, 3, 4, 5. Got a 5 there, 2. 1, 2, 3. Just keeps going really. I mean, it's difficult to say what it might be. I mean, this could be an A and a B, and I guess this could be a C, although currently the third part is the smallest part. But it's really as ever, it's looking for the next pullback to give us some kind of signal. Look at the Dow, and on the Dow, the initial wave here is clearer and bigger. In fact, more of an ABC. We count that as well. Then we've got a possible B. Then again we've got the 5 waves down here, followed by this 5 waves down here. 1, 2, 3, 4, 5. But it could be an ABC, a B, and then another A, B, C. So this is obviously unclear. Right now I've put the Fibonacci retracements in the purple colouring. So 38.2 is bang on where the Dow is now. It hasn't reached the wave 4 resistance, so that's what it is. And again, it's all about seeing some kind of pullback now. So again, the bear case looks a bit better there because we had a slightly weaker rally. FTSE. Okay, with FTSE we've got a clearer ABC in the sense we've only got one decline here. It counts the 5, then a B, and then this sort of overlapping type thing. By overlapping I mean that the wave 4 has overlapped the wave 1 quite dramatically, in fact. So that looks more corrective. Again, we've got a retracement to 38.2% level. Again, let's have a look at the shorter term action. And that is a little bit less determined. So that's an ABC, which tends to be corrective. That could be a B and a C. So that could be a complete ABC, and then a B to there. And then there's quite strong C wave coming in. 1, 2, third wave thrust there. That's all of 3, 4, 5. So yeah, there's certainly a stronger case there that it's time for some kind of pullback, and as I say, it depends on how that goes. In terms of time, and time is equally important to price, you'll notice that we've had a decline of around 2 weeks. So we've now had 3 days of upside, sorry, 4 days of upside, and yeah, that's about right. In fact, I mean, it's 2 weeks to 4 days is about the right kind of ratio. So I had to see what next week brings. Really, we have expiry coming up in 2 weeks' time, which is interesting, but isn't necessarily that relevant for next week. Right, the DAX is very much on a par with FTSE. 5 waves down initially, ABC quite clear. Then a 1 would have been a 1 ABC. But that's when it started to go wrong with overlapping stuff, and then the final 5-wave form. But this doesn't look impulsive terribly. We then got this flat bit at the end, which actually formed a triangle before we saw the breakout. Although the breakout hasn't actually been as dramatic as it has been with other markets. Okay, I put the Fibonacci retracements here. So again, heading for the 38.2%, but a much more corrective looking format than we saw with, say, the S&P. Let's go down. This is a 10-minute chart. So we saw a low here. That does count as a 5. Then it then started dithering really. So we had this sort of ending diagonal type thing, which is a bit of a garbage low, in fact. So it could be some kind of A, B, C maybe. Difficult to count precisely, but nowhere near as dramatic as you might expect. The DAX has been a lot more dramatic than other markets, the FTSE certainly, but there certainly is scope there for this. I'd say garbage bottoms are technically they're something which tend to get taken out. If you don't see a clear bottom, then it tends to mean that the low is not long for this world, as it were. Right, have a look at the Nikkei. This is the hourly chart of the Nikkei. As you can see from all these gaps around here, the Nikkei is not a market to trade if you want to see gaps being closed on a regular basis. Basically, we've got an A, B, C. Looks like a B. 1, 2, 3. So there's a case here for a fifth wave, in fact, to complete a possible ABC move. And you'll notice that the rally here, whereas it's been okay, has been nothing like we've seen in Western markets. So I think there's probably more to come there, and I think there's also like to be a turnaround on Western markets next week. Possibly got a deep one given the moves we've seen. Right, now look at pound dollar. Okay, here's the hourly chart of the pound dollar. Saw a peak there, a very clear, sharp decline, followed by a possible 2 wave. Now this counts as a 3 down to there. I've now got an ABC form for a possible 4th wave. So what we're looking for really is one more decline down to complete 5 waves. That will then give us a trend reversal signal, and then a weak rally would be a good entry point. Always a possibility with these things that the market may just decide to keep on going down. We've seen a bigger correction than you might expect, perhaps, but the wave count is pretty clear at this point. So the biggest concern may be that it actually continues to be more strong, but we do need to see another decline to give us that 5th wave form. And finally, have a look at gold. Okay, I mean it's not a bad rally we're seeing here. I mean it's certainly a case that's sort of 1, 2, then it just gets all dithery really. And although this doesn't look, I mean that looks like an ABC, this looks corrective. Looks like we're going to see some kind of retest. It just hasn't got anything in it that's terribly interesting. Having said that's the final market, we'll have a look at the T-bond, which is quite an important market to look at. Okay, this is an interesting market. This is a weekly chart going back to I mean the peak was seen in 2012. You can see clear 5 waves down here, and now there's a blip up, which looks pretty impressive on the daily chart. I mean, it's been a good rally, but on the weekly chart it looks just like a sort of correction you'd expect. Possibly a B wave to come in with another C, and then I think bonds may well be headed down. That could take a while. I mean, we have seen this move here is over a period of I think 15 months. So you could easily see at least 3 months, if not 6 months. So we're not expecting something to happen that quickly, but sometime in 2014 we could see the bonds reverse, and it could be a 3rd wave down. We have got these other peaks here, which suggests it could be a big ABC. If so, we'll see something different. But for the time being, I'll stick with this count. And also, I think there was a question of the actual highs at the time. I think this is a continuation chart. Obviously, the futures, so you get slightly different parameters because of the way things work with futures. Anyway, that's all for this weekend. If you found it interesting and useful, we'll be back with the opening report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.